Hello everyone, welcome back to my YouTube channel Learn with Ahmadi. Many people think accounting is just math, but it's actually the language of business. Today I'm going to break down the fundamentals of accounting so clearly that you could explain it to a 5-year-old kid. Accounting is the art of recording, classifying and summarizing many related transactions and events, and interpreting the results to understand a business health. So what do I really mean? Let's discuss. So to understand recording, imagine this as your business diary. Every time money moves, like buying a chair for rupees 3,000, you write it down in a journal or daybook. What are they? No, don't worry. We will discuss them later. Then we have classifying. Now you don't want your diary to be a mess. You group things. All furniture goes into one folder and all rent goes to another. In accounting, we call these ledgers. Then we have summarizing. At the end of the month, you don't need the whole diary. You look at one-page report to see the big picture, what we call profit and loss statement or balance sheet. Then we have interpreting, explaining what the report means to make better business decisions. For example, why is profit low this month? We earlier discussed that accounting is the language of business. So to speak a language, we need vocabulary, and there are 4 main heads of account. Number 1 is asset. These are the things you own, your cash, your building, and even money people owe you, what we call in accounting account receivable. Then we have liabilities. These are what you owe, bank loans, unpaid bills, or salaries you have not sent yet. Then we have income. This is the money flowing in from sales, like sales itself, rent received, commission. Then we have expenses. This is the money flowing out of our business to keep the lights on, like rent, electricity, salaries, stationery, etc. Now let's discuss accounting equation. Asset is equal to liabilities plus owner's equity. This is the foundation of accounting. We discuss asset and liabilities but not owner's equity. So it is the owner's personal investment plus profit minus any drawings. In accounting, by drawing we mean money taken out for personal use. Think of this equation like everything the business owns was paid for in one of 2 ways. Either you borrowed money from someone else, what we call liability, or the owner put their own money into it, what we call equity. And this scale, it should always be balanced. And if it does not, it means someone made a typo. So now let's discuss types of industries. Service industry. Here we sell skills or time. For example, hospitals, schools, barbers. Then we have merchandising industry, where we buy finished products and resell them for profit, like supermarkets, clothing stores. Then we have manufacturing industries, in which we buy raw materials and turn them into new products. For example, car factories, furniture makers. But we have to keep in mind that no matter the industry, they all produce the same report cards called financial statements. So now let's discuss financial statements. So these financial statements are formal records used to show the financial position of a business. Income statement, its formula is income minus expenses. Profit is equal to income minus expenses. They show profit or loss over a period. Then we have balance sheet. It shows financial health at a specific date, and its formula is asset is equal to liabilities plus owner's equity. Then we have cash flow statement. It tracks actual cash moving in and out of the business. Then we will study in our further videos as well what are operating activities, investing and financing activities, and how to make these financial statements. Now let's discuss regulatory organizations. They are the rule makers. In US, the FASB, Financial Accounting Standard Board, they write the rules, GAAP, which you might have listened. Then we have AICPA, American Institute of CPS, which said ethics and exam statements for accountants, and which supports them. And we have SEC, Securities and Exchange Commission. It is a government agency which protects investors and ensures public companies are honest. So if you have any question, please let me know in the comment section. Thank you for watching.